Hey everyone, Pfizer stock is offering passive income investors a dividend yield near 6%. That has a lot of dividend stock investors asking about Pfizer stock and whether or not it makes a good stock to buy at current valuations. So I will evaluate Pfizer in this video and I'll answer if it makes a good buy at current prices. Let's get started with the dividend yield. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so like I mentioned, Pfizer's dividend yield has been improving. At current levels, it's offering passive income investors a dividend yield of 5.86%. But remember, when you're buying dividend stocks, it's not just the dividend yield that you will be receiving. You're also exposed to the change in the stock price. Whether the stock price increases or decreases will determine your overall return on investment. The dividend yield is just one component of your overall return on investment. The change in the stock price also needs consideration. So I'll evaluate that part for Pfizer stock investors next. So in its latest quarter, Pfizer's revenue declined, but most of the decline was because of the decrease in Paxlovid, which is the treatment for COVID-19. So I'll share with you the company's boom and bust cycle, but excluding the contributions from Comirnaty and Paxlovid, revenues would have grown 11% operationally. So given those two are in significant declines, overall it's bringing down the company's business, and that's expected to continue for at least a very near term. So to cope with these declines in revenue, Pfizer is on track to deliver at least $4 billion in net cost savings by the end of 2024 from the previously announced cost realignment program. So they'll deliver some cost savings in order to keep profitability on level given the decreases in sales. Now, longer term, you can see Pfizer's business and the boom and bust cycle here. They were generating roughly $50 billion in revenue before declining in 2020 down near $30 billion. Remember, treatments and hospital visits and all of those decreased during the earlier stages of the pandemic. People were not visiting hospitals as often. People were not seeking medical treatment as often. People were avoiding each other. And so the number of cases of cold and flu and other things were also decreasing. So there was a huge disruption in the medical services, in the medical treatment market as a result of COVID-19. It was just massive disruptions all over the place. It wasn't just relating to COVID-19. It was all over the place. And so Pfizer initially experienced a decrease and then the huge boom when it came out with the vaccine. You saw revenues jump all the way up to $100 billion for a couple of quarters before collapsing back down to its longer run trend line here of $55 billion. And that's the trajectory of Pfizer's business overall. It's going to invest billions of dollars in research and development in trying to find new treatments for diseases. And sometimes it's going to hit it big. Most often it's going to miss. But those big hits have delivered significant revenue and profits for the company longer term. It has developed the know-how for drug development and treatment. And so even beyond drug development, it's developed the know-how of acquiring other companies that are developing drugs in certain stages. And so that whole process, Pfizer has developed an excellent know-how of the industry and the industry dynamics, and that's benefited shareholders longer term. So if you look at Pfizer's profitability in 2022, I would say late 2021, it reached the highest cash flow from operations to sales rate in the company's recent past, eclipsing 45%. Now that has since collapsed down to 15.57% given the boom and bust cycle with COVID-19. Similarly, with its operating profit margin, it was approaching 40% during the boom times, and now during the bust cycle, it's down closer to 2.16%. But given the company's $4 billion in cost savings, I wouldn't be surprised if its operating profit margin rebounds over the next 12 months as the company's cost savings are implemented. In terms of earnings per share, the analysts on Wall Street that are following Pfizer stock, they expect Pfizer will be flat over the next 5 years, slightly negative, 0.53% negative per year in earnings per share for Pfizer over the next 5 years. So analysts on Wall Street are not bullish about Pfizer's prospects over the next 5 years. Finally, looking at Pfizer's valuation, it's trading at a forward price to earnings of 10.36, which if we compare to its earnings per share forecasts for the next 5 years, is not very favorable for investors, because you're paying a forward PE of 10 when you're getting zero earnings growth. I prefer to pay a price to earnings closer to the earnings per share growth I'm getting from a company over the next 5 years. So if I'm paying a forward price to earnings of 10, I would like to see earnings per share growth closer to 10%. Doesn't have to be 10, but just something closer to 10, maybe 5, maybe 6%, somewhere along those lines for me to consider making the investment in Pfizer stock. Now, you are getting an attractive dividend yield with Pfizer stock at 5.86%, but for the stock price over the next 5 years, I wouldn't be too optimistic about Pfizer's stock price. So given the risks with the stock price, it doesn't seem like the dividend yield alone is enough to make Pfizer stock a buy. So if I was to answer, do I think Pfizer stock is a buy, hold, or a sell right now? I would rate Pfizer stock as a hold. I don't think it's a terrible investment. I don't think it's one that you should sell and get rid of. I also don't think it's one that you should be jumping over yourself to buy. If there's a price drawdown, if there's a decrease, or if its prospects look better over the next, you get some highlights, some news over the next couple of weeks that makes its prospects much better than where we see it today, then it could sway my decision over to the buy side. But as of right now, the valuation and the prospects going forward, not very attractive to me. I think there is better investments available. Several of my companies that I follow, I rank higher than Pfizer at current valuation. So to update it today on May 28th, I would say Pfizer stock is a hold. Market performance going to perform roughly along the lines with the market, according to my estimations and my evaluations. So there's my outcome, and dividend stock investors can come to their own conclusions after their own due diligence. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.